Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from Money 2020 in Las Vegas, Nevada. Joining us for this segment, we have Dushyant Shahrawat, Director of Investment Banking over at Rosenblatt Securities, to discuss where Fintech is headed for 2024. Dee, it's great to see you as always. Welcome back to
Nice to see you, Jill.
TradeTalks.
Thank you for having me.
Before we get into your outlook, what's the state of the Fintech industry now, and what's the vibe that you're getting at Money 2020?
Sure. Well, it's been quite a cathartic moment last 2 years, right? It's been, doesn't kind of seem like it right now because we've got 13,000 people registered for Money 2020. But, I was looking at some numbers over the last, 3 years before the recent downturn that happened. And I've just, last 3 years, November, since October of 2020, so before the downturn, right? S&P 500 is still up 24%. Nasdaq is up 14%. The Fintech index of the top 55 publicly held Fintech companies, down 60%. So over the last 3 years, like longer arc of change, we are still significantly down in the public markets in the fintech space. The reason that's important is for two levels. That one, what happens in the public fintech market tends to have impact on valuations and funding levels in the private fintech market, and it impacts long-term LP allocations, how pension funds, endowments, foundations, the source of capital for private funding in the fintech, at some level is measured by what is happening in the public market. So I think it's been a tough time, but I think things seem to be improving. We thought there was a glimmer of hope with the new IPOs coming out in late summer. Things have retracted back to some extent. So I think there is hope, but I don't think we're going to come out of this as fast as we were hoping to in the summer.
It's interesting that you bring that up. What happened in the private market space with that valuation reset did impact those fintechs that came public when the market was hot in 2019, 2020, in the first half, 2021, let's call it that. Perhaps that valuation reset needed to happen. Maybe expectations got a little bit too far, that growth at any cost maybe wasn't the best strategy.
Yeah, no, absolutely, Jill. But I mean, it is concerning that great names like Block, right? Jack Dorsey's company. I mean, again, I was just looking at the numbers and where the market closed today for Stripe. For Block. Block is down like 32% year to date, 55% down from its highs in the summer. It's the lowest point the stock has been in the last 4 years. And Block is, well-known retail, institutional, global brand, beyond payments. They've got a banking license and all of that, right? So the fact that the best-known fintech name in the public market is still down significantly, and it's an all-time low from the last 3 years, is not a good sign for the market, right? Stripe in the private market, right? Bellwether name in the private market. We saw some private shares being traded in the secondary market for Stripe at $24 a share. They were trading at $70 a share literally a year and a half ago. That means the value of Stripe is down from $155 billion to about $45 billion in a period of 2-3 years. The reason that's important is when large bellwether names in the public market and the private market tend to do bad or they're under pressure, that has a downstream impact on everything else that's being priced in terms of the private market, in terms of seed stage capital, Series A, down to late stage companies. So all the private fintech companies, the unicorns that were waiting in the wings to go public, that time frame tends to be pushed back a little bit, quite a bit.
What about the crypto space and digital assets more broadly?
Yeah, absolutely, Jill. In fact, you can walk the hallways here, you've got Circle and Ripple and big boots by big companies. We actually spent the time this summer representing a company in the crypto space. Of course, I would have said very different things last week because last 5 days we've all been surprised. Bitcoin is up 15-18% last 4 days alone. I think a lot of that is just optimism that eventually the SEC approves a spot Bitcoin ETF. There are 10 large companies, as your listeners would know, that have got applications for spot Bitcoin ETFs like BlackRock and Fidelity and WisdomTree and Narc Invest. So I think some of that is short-term, is focused on the ETF stuff. Our view has been we're not just looking at the crypto space, but broadly what is digital asset adoption by institutions and increasingly blockchain utilization by institutions for replicating and using blockchain for traditional capital markets technology here. This week we had DTCC acquiring a blockchain company called SecureNC. Small firm. This is DTCC, core market infrastructure for clearing and settling equity trades. If they are acquiring companies outright that are blockchain companies, that gives me tremendous hope that there is future in that space. In the summer, we spent time talking to almost 50 institutions, large names, Jill, that are doing two major things. They're tokenizing more and more funds. Second thing, they're using the blockchain platform for underwriting securities, particularly in the fixed income space. Goldman Sachs, JP Morgan, in the international market, DBS, we're going to be in Singapore in a couple of weeks' time. All of those guys are using blockchain as a platform for doing things they have done in the traditional market using traditional infrastructure, just better, faster, cheaper. It's not at the scale we'd like to see it at, but there is real movement in that direction, both on the tokenization front and using blockchain for underwriting. Those are the first use cases, and there could be a lot more use cases coming down the pike as well.
I think with interoperability improving, that's certainly going to be a catalyst there. What other trends, what other interesting banking mandates are you looking at?
Yeah, sure. In fact, we are here representing a company that is in the cybersecurity space, right? So it's like every 2 years there's a hot buzzword. AI has been the, buzzword of the last 6 to 9 months, but we're seeing security being a major issue. We are actually representing a company here that's raising a Series B round that is a secure browser for large financial institutions. 75% of the time that employees are spending today, they're spending on the browser. Over 90% of cyber attacks that are coming in large enterprises are coming through the browser. So clearly a Microsoft Edge, a Safari, or a Google Chrome is no longer helping. So I think security across the board, not just for financial institutions, but particularly finance, is a major issue, and we're actually representing a company, like I said, that's raising capital in that space right now. So security, I think, for the next 12 to 36 months is going to be a hot button issue.
Which is interesting, because when you look at a lot of tech spend surveys, cybersecurity is one area where they're looking to increase spending, not dial it back like other areres of tech.
Absolutely.
So I would agree with you there. Where is the fintech industry heading as we think about 2024?
Yeah, I mean, hopefully as a banker, I'm always very optimistic, but it's been a tough last 12 to 18 months. I think all eyes are on the public market. We have to see some meaningful improvement on the macroeconomic side, whether it's inflation, macroeconomic risks like the Middle East, so I think a lot of that has been driven from that. For the fintech sector, it's really going to be, we've got to see recovery in large names like PayPal and Square, as we talked about, a Block. Meaningful recovery, hopefully, in the valuations of companies like Stripe in the private market side. Hoping for companies, great companies like Circle, for example, that had plans to go public through a SPAC, has been put back. I think some of those companies coming back to the market, maybe Chime in the challenge back space. So we need some meaningful names that are late stage unicorns in the private market filing for an IPO. That'll catapult everything else in the private market to actually get back on stream. So I'm hoping for a better environment, but I don't think it's going to come as fast and easy as we were hoping that it would be this summer.
All right, Dave, appreciate the insight as always. Thanks for joining us on Trade Talks. Thanks for joining me from Money 2020. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.